What up, guys? What up, guys?
Yo.
It's your boy Falaka Mamba in the building.
You know what it is, guys.
Yeah,
Tremaine
yeah.
over here.
Yeah. So before we could continue, guys, with the today's video, we're just gonna. Well, I just wanna tell you that click the subscribe button and what else?
Definitely drop the video a like if you're one of our regulars. If you're part of the Chasers fam, drop us a like. Yeah.
And a comment there. Oh, don't forget to share with your friends there at home. And yeah, you don't want them missing out on this important information that we're gonna be talking about here. Basically, guys, I and Charmaine here, we're just gonna be talking, guys. We're just gonna be talking because we feel like this thing of trading is in our blood, so we don't have to like practice or learn. We're just gonna be freestyling everything. So if I take some long time to answer maybe Charmaine's question, just understand that we didn't prepare for this. So it's just gonna be happening freestyling. So yeah, I guess.
Yeah. Okay, guys. So in today's video, like the title suggests, we're gonna be going into some price action tips. So I guess we'll kick off. Fanilake, do you have any price action tips for the people out there? Maybe just drop one, and then we'll just expand on that one price action tip.
To be honest, I don't have any.
You don't have any? You wanna keep them hanging.
To be honest, guys, firstly, let me just tell you about something that I learned about psychology yesterday. Is that don't be in denial of what market is doing to you. Like yesterday, guys, I took a trade on gold. And that gold trade, guys, I was saying it's gonna go down, but what I noticed is that it broke my key area and closed above, and it came back for a retest. But I was so in denial of saying that what market was telling me. I wanted it to push to the downside. So market really humbled me. My ego was too high. I was having this thing where I'm always right. Most of the time, I'm always right with the gold and GA. So I had this thing to me, you know what, it has to follow me, and market really humbled me. So guys, just don't think or market is gonna follow you in any way. Just follow market and just be in the car and ride wherever the market is going. Just be in the back of the car and ride with the car, because of you're never gonna push a car. So the best thing is just to be with the winners. They say if you cannot beat them, join them. Yeah, so yeah.
You hit the English there. You hit the English.
Yeah, guys, English is always killing me. So today I did the thing. Yeah. So guys, tips on price action. One tip I'm gonna be giving you today is that when you are trading PA, you have to differentiate between trend lines. You have to differentiate between support and resistance, and all those things of supply and demand. All those things. Those things, they are not a price action. When you're talking about price action, you're talking about candlestick formation. That is the real price action, whereby you being able to read what is happening in the market by just looking at the candlestick. But then support and resistance, they're just there just to assist you and help you see those important key areas that you should be looking at for them, but not necessarily trading based on them only. So the most important thing is that you trade based on what price action is doing. So if I don't know, Doc here, if you have something to say. Oh, by the way, guys, I'm calling this guy Doc Tremaine because he knows everything. This guy, he knows everything, so I'm calling him Dr. Tremaine. Yeah. So yeah.
Yes, guys. So I've been given a new title. Yeah. Doc.
Yeah.
No, it is.
So we just have to go to University of Vet and make it official. Yeah.
You know what it is, guys. So I guess to just expand on what Fanilake was saying about actually reading the chart, guys. The charts are really always giving us information on what's going on. They're always telling us, you know, those candlesticks that we just look and we think about whether a candlestick is green or red. That's not all the candlesticks are showing us, guys. That's not all structures showing us. Structures really giving us information on what the market is preparing to do, because that's our job. Our job is to gather information based off what we see on the charts and then make a decision on the information that we've gathered. Obviously, we don't take in too much information. So to go into price action, guys, you want to have, maybe I'd say, specific time frames that you're looking at, specific pairs that you're looking at. You don't want to take in all the information. You only want the relevant information that's going to be necessary for you to make that next trading decision. That's all that's important, guys. Not going back to 2015 and looking that support was tested in 2015, guys. The current price action, what the market is doing right now, is going to give you, because you're going to take that trade right now. So you need to be understanding what the market did a while ago not so long ago that you end up confusing yourself saying that no, 2016 the market rejected here, and now what current price action is showing you big candlesticks going to that resistance, but you're still adamant on selling there. Guys, price action is really giving us information. We look at the size of the candlesticks. Does that candlestick show us that there's a lot of buyers or that there's a lot of sellers? Is that candlestick a doji showing us the indecision, the balance between maybe buyers and sellers, maybe that they're not decided? All of those things, guys, they're really important. The price action is really giving us that information constantly. Time frames, candlesticks, market structure. It's really just
Yeah, so guys, this is my mentor here, Mr. Adam Stock slash Stock. I mean, as he's just talking about something that is very important, which is time frame. So guys, one thing that I noticed about most traders, they don't know this thing called top-down analysis. So top-down analysis, and even if they do know, but they don't know how to use it, the important key factors of top-down analysis. So let me just give you a quick peek of top-down analysis. Guys, just gonna have to forgive me. English is sometimes, you know guys, English, but anyways, guys, in the building, you know what I mean. Yeah, so guys, top-down analysis is one of the most important things that you have to look at before when you're opening your chart, starting from a monthly time frame. One thing, the reason being, as you look at the monthly time frame, is because of you have to look at what the market makers are looking at. That is where you're gonna see what these people are saying, because of the same chart that you are looking at is the same chart that they are looking at. But the difference between you and them is that they have goals and you don't have goals. So for them, from the current price, they know where they need to push price to. They really don't care what happens in between, but they know that the goal is that price is gonna move from point A to point B. So that is why you go to weekly time, monthly time frame. You just wanna know the overall direction as to from point A to point B to point C, where the market is gonna go. That's where people misinterpret it as to, you find out a long-term perspective, market is bullish, and then you find when you go to 50-minute time frame, find someone is looking for selling opportunities. So what you're basically doing, you are just what can I say? English just did the thing again. Yeah, but you just conflicting yourself. Yeah, I wanted to put. Yeah, you're just conflicting yourself to a point where you are saying, okay, in the longer term we are buying, but short term we are selling. So what are you basically doing? The way the thing should be when you're doing top-down analysis is that monthly time frame should be telling you that we're buying. Weekly time frame should be telling you that we're buying. Daily time frame should be telling you that we're buying. H4 time frame should be telling you what's gonna happen today. Okay, from today we might see maybe price pushing to the downside. If you see that price is going to the downside, okay, it's fine. Don't take the trade. Just wait to trade with the market, because of most people. I feel like this topic that we're talking about today is gonna be including the psychology side of things, whereby people fail to be patient and wait for the market. They just feel like, because of I've analyzed, I have to be in the chart 24/7. It doesn't work like that. It doesn't work like that.
So that's the quickest way to make a lot of bad decisions. When you feel that impulse that I need to trade, guys, that's where you end up making those quick decisions, because you just, now money's on your mind, not really you're not thinking about the process that you're executing anymore. Now you're just thinking about being up on the week or being positive or whatever the case is. It throws your own personal goals out the window.
Yeah, so you basically maybe trading out of your trading plan now. You're just doing things because of you feel like you have to. In the market, guys, don't involve feelings. Once you start to involve feelings, you're gonna be in big problem, because feelings, they're gonna tell you the market is gonna go down, while the market is saying I'm going up. So you see, like what happens to me yesterday on gold, I was like, it has to go down. My feelings I was saying market has to go down, and it went up. So just eliminate those emotions. I know they're gonna at some point they're gonna mess with you, because of they are there. You are a human being, you are bound to make those mistakes, but in a long-term perspective of things, you just have to be able to maintain them. I was not there, but we are just, we're just freestyling this thing, so we're just talking.
Sorry.
Yeah,
I made you go off topic.
Yeah, but what I was telling you guys is that always trade with the trend, and time frames, they must complement each other from top down to from top to down analysis to H1 and 50-minute time frame. That's where I end. And 50-minute time frame, you should be able to find a complement whereby time frames are complementing each other. They are speaking the same language, like code. Like speaking the same language whereby they are buying. Then that's why we call those kind of trade high probability setup. So that basically you have chances of losing, but more chances is that you're gonna win are high than chances that you're gonna lose, because of you are trading with the trend. So basically that's what I wanted to say about time frame, multiple time frame. Just don't confuse yourself by your time frame you're buying and then short term you're selling, and you're just gonna take more losses than you take wins. So yeah, Doc, over to you, my guy.
I think I want to expand on your topic about time frames. Also, another reason why we do top-down analysis, guys, because remember we said on the monthly, we're looking at whether this market is going from point A to point B, or from wherever, whichever direction, from point A to point B or from point A to point B. Doesn't really matter. Now, imagine if you look at the direction from a monthly perspective, and you drop down maybe to that H1, and the whole month, because now we know for a whole month, we're going to be moving from this point to that point. Now imagine if for a whole month you hold that, maybe that bullish bias, how many opportunities are you going to be able to jump into? If you're trading based off a monthly bias that we're going to be buying for the whole month, if you hold that bullish bias and prices buy for a whole month, you're going to get so much more opportunities to be able to, first of all, get entries in the direction of the trend. Second of all, you're going to be able to let your winners run because you're trading in the direction of that higher time frame momentum. Third of all, you're going to get opportunities to be able to scale into that trade as it's going along that higher time frame momentum. That's why we trade in the direction of those higher time frames. Where do we see the higher time frames going? Because yes, there's opportunities. Maybe if you drop down to a 1 minute, there's opportunities to buy, there's opportunities to sell. But where is the market going long term? Where am I going to be able to maximize on my wins? Because that's how people make it, guys. We cut our losses short and we maximize on our wins. We let our winners run. And the only way you're going to be able to do that is if you're trading in the direction of a trend. You can let your winners run and trail stops and be able to maximize on the full trend rather than trading those small short-term pullbacks or whatever against the higher time frame trend. You're only going to be able to capitalize on those short moves. And yeah,
guys, so basically you had Doctor saying his side of things in terms of market. Basically I and Doc, guys, we have the same mind, because we're just talking, guys, and we're just talking things that if I'm talking something and something comes to him, and then he's talking something, then something comes to me. So basically we have the same mind because of your trader. We're just freestyling. I'm just looking at gold here, guys. I took a trade on gold here. Currently on a drawdown, to be honest, but I'm super positive about this trade. I'm super positive, but one thing I want to say to you guys is that just focus more on candlestick and structure of the market as to what the market is doing, rather than trading based on support. Okay, now the market is on resistance, I have to sell. The market is on support, I have to buy. Don't trade like that. Trade with the price. Okay, one thing that we have to look at too, how did the market get there? When the market was going to that key area, that important key area, yes, you have your support or your resistance or your supply and demand, whatsoever you call it, order block, whatsoever you call it. You have them there, they're in place. You look at the price action now as to how is the price going to that key area. Is it coming in passively? Is it coming in a form of a descending or ascending type pattern? And then you see what is it that price is doing when it's getting to that key area. Is it correcting? Is it showing some reversal pattern? Is it showing some continuation pattern? Then that's when you can start to think of making some decisions based on what the price action has been telling you. Because of if you're going to be trading based on support can be violated and come back into structure. So you guys just going to be taking those losses whereby find out that your support was being violated, market came back into structure, formed some continuation pattern short to the downside. So you're gonna find yourself taking those losses whereby you'll be like, damn, I should have waited a little bit longer. Maybe I could have caught this trade. Wow, they just took me, like, they were like, hey guys, Tamin just took a trade. Market makers, they'll be like, Tamin just took a trade now. Let's just hit his stop loss now.
I'm about to take him out, sending the market up now.
And then they take you
like,
out.
That's what's happening behind the scenes. Hey.
Yeah, so So basically, guys, what I'm just trying to say is that trade based on the structure and don't trade like Tremaine, who's just trading. Just trade based on support and resistance and make us are making
buy
calls.
and just sell. Yeah, guys, you actually need to give your trades that time to develop. Remember, we're trading, guys. We're using money. Guys, we're using money. Let's not forget that the job that we're doing, when we say Forex is our business, it's money that we're busy with. Now, would you honestly put your money on something that you know is not worth it? Let's say you want to buy a car. Are you gonna buy a car without an engine? It's probably not worth it. Maybe you spend that 100k for a car, one car has an engine, another 100k for another car, that car doesn't have an engine. You're gonna wanna buy the one that you can see is going to give you the value. The exact same thing with trading. Give the setup the time to develop, to give you the information. You need to be able to see the value, see the confluences, see the candlestick confirmations, see everything that convinces you. Go in the car, open the hood and see the engine. See that what you're putting your money into is going to give you a reward, or is going to at least give you an opportunity to capitalize in some way. Whether it's, even if you don't make that gain in terms of monetary value, you're going to make that gain in terms of knowledge. Why? Because you observed, you watched the price action. Whether you lost or whether you won, you're going to learn because you paid attention to the detail. You're looking at the actual price action. So, yeah.
Yeah,
Are you
exactly.
planning on buying a car with an engine or without an engine? Or what's the story?
You know, guys, it reminds me yesterday when we were having our 1530 session on the 3.0. It reminds me when I was talking about a crocodile, that if you want to kill a crocodile, you cannot just go into water. You just have to wait for it to come outside to its weakest point, and then that's when you strike. So basically, guys, wait for market to mature. Once the market is matured, then you enter. You don't just be like, okay, because of I have a gun here, a gun is gonna disappoint you underwater. You're gonna be disappointed because of, you find out maybe crocodile is having some bulletproof underwater. You don't know that. So just wait for market to mature, and then you will read the real true nature of price action as to how. And I feel like, on my experience as a mentor, because I've been a mentor for Forex traders for quite some time, I feel like most people, they know how to trade support and resistance, but they don't know how to trade price action. That's why many people, they miss the point. That's why I find out many people are losing. But when I start to go candle by candlestick explaining what is happening, people, they just get so confused to a point whereby they don't even know what's happening. It's like I'm teaching them a total new strategy, whereas I'm just teaching them candlestick formation as to, okay, this candlestick did this, why it did this, what was the move, the motion behind this candlestick, what happened, who lost, who made profit, and all those things. Just explaining in depth the true nature of price action. So people, they just fail to do that. But we're not here about that, guys. But one thing I just want to tell you, that focus more on learning the true nature of price action than to try and master those key areas, support and resistance, order blocks. This guy likes order blocks. He was just telling me about, like, for instance, there's this trade, I don't know if it's CFSJPY. Market came into that trade with a very, very impulsive move, but then it rejected. It bounced like exactly at that order block. He calls them order block. So one thing I'm telling you, I'm trying to say is that, guys, at some point you're gonna catch those moves with what, with the support and resistance, but you're never gonna be consistently profitable because of, you are not trading the true nature of PA. You're just trading what, just trading support and resistance, of which, if some next time when it happens, market is gonna just come with the momentum and then breaks and carry on and just keep on going, and you're thinking, no, you just have to respect. You keep on buying. You just keep on going down, keep on pushing to the downside, because if you can find out that move that we saw with Dog, it was a fake move, taking people out who bought earlier, just took them out and then found that resistance and then push support, and push to the upside. So
and I hope you guys are even watching what he's saying, that when we're looking at the market, the candlesticks give us so much information, really so much information, as to we even know when there are buyers that are being taken out, when there are sellers that are being taken out, when a high is actually formed in place for the day or for the session or for the whatever. All of this, we're looking at the exact same chart that you're looking at, the exact same candlesticks, and it's just, I guess there's no difference between us and you. Maybe just that we pay just a little bit more attention to the actual price action. And we kind of, I guess, are not blinded by all of the nice terminology, fancy terms, support and resistance, trend lines, all those things. They don't convince us. What allows us to make that next trading decision is getting information straight from the market, reading the language, understanding the language of the market itself, and not the interpretations that people have come up with of the market. Like support and resistance is someone's understanding that we've all just been taught. Trend lines is someone's understanding that we've just all been taught. And a lot of us traders don't go beyond just the concepts that we've been taught and actually go into why do those concepts work, why don't they work. Because if you go that step further and go into why, then you start to understand the real nature of what's going on and why it's happening. And yeah, I guess that's where probably maybe where I'd say the real growth starts to come in. So you take your time as a trader in the beginning. We all the same. We all went through the same learning process where we learn the concepts, we take our time, we backtest, we do all of these things, we go through. But eventually with the market experience, if you guys take these tips that we're basically giving you now about price action and you start to pay attention to the details at an early stage, you save yourself a lot of time in the future where you have to go all the way back now to learn exactly what we are saying.
Yeah, just don't be in denial of the truth. Just accept what the market is telling you and what the market is showing you. You know, there's a guy who once told me a story. You know what this guy told me? This guy said to me, there's a guy by the name of Lesiba Mutupi. And he said that guy is having a Forex Chasers institution. And he said that in the Forex Chasers, there's this course called 3.0. And he said in that course, they have daily session. I was like, what? Daily session every day? We're like, yeah, man, even at 15:30, they're trading live with our members. Are like, man, no, I cannot miss that one. You want to make sure that you don't want to miss on that.